Hello and welcome back to chapter 23. This chapter is about income statements. Chapter 23, 24, 25. They are linked to accounting. So we're going to explain these and illustrate what should you study in the exam. So in this chapter we're going to study about the income statement, what is meant by profit, how to calculate profit, why it's important to businesses, and we're going to explain the income statement and its features, and I'll tell you exactly what should you know in the income statement part. In the exam you're not responsible to draw an income statement, however you need to know the details and you need to know how to calculate some figures because we will use them in chapter 24 and 25. So first, when I talk about the financial records of the business, we call them accounts. Of course, professional people should, on daily basis, should record all the financial transactions of the business, from sales to purchases to expenses. These people are called accountants. So usually the business at the end of a period, usually at the end of a year, they produce something called final accounts, or a set of documents that will give us, let's say, an overview about the business performance during the year. These final accounts are income statement and balance sheet. We have many, of course, but you will see two in this book: income statement, the one that we will explain, and balance sheet in chapter 24. So this is first the meaning of accounts and final accounts. Now, with respect to income statement, it's simply a statement that shows the business profit. At the end I'll see details about profit of the business. Profit simply is made by selling customers with a price which is higher than the cost, and we all know this. So profit simply is the sales revenue minus the cost of making products or cost of buying the products. We assume that the business is buying products and selling them, or sometimes the business just make the products and then sell them. So the first word here, the revenue, the sales revenue. So when they ask you what is meant by revenue or sales revenue, it's simply the money that the business makes out of sales of its goods and services. Or you just put the rule, which is quantity times selling price. So my revenue of selling 5 chocolate each sold for $2 will be $10, which is 5 times 2. Now, importance of profit to private sector, this is also important here. They ask you what is the importance of profit, why profit is important for a business like X. So I should understand that profit is a reward for owners, or reward to owners, because they take risk in investing. It's a measure of success of the business. I can tell if the business performance is good or bad. Profit is important because it helps to finance the business activities, financing or buying non-current assets, like buying machines, buying vehicles, equipments, expanding the business. Profit is important because it attracts investors, and remember, investors are needed to expand as they provide finance to the business. So I should be able to know details why profit is important to the business. Difference between profit and cash, already we covered this and we illustrated using an example. Of course, when we invest money in the business, or the money invested in the business, or the money we borrow from the bank, will increase our cash, not our profit. We know already that capital expenditures like buying machines will decrease the cash but not the profit. When you sell goods on credit, we sell goods to customers and they will pay us later. It will be recorded in the income statements as the goods that have been sold. So this increases the profit, but cash doesn't increase, of course, until we receive the money. So see, we have to just illustrate. When we pay for expenses, we pay using cash. Profit becomes more important for the long-term success of the business. Here, when I measure the performance of the business, I will be looking at two main things. At the profit, of course, that I'll calculate in the income statement. And of course, I look at the liquidity of the business using the balance sheet and of course other figures. So we have to understand that the income statement will show me details about the profit, expenses, revenues, cost of goods sold. All these details you will see in the in the income statement. Okay, in the income statement. So income statements, they are financial statements, record the revenue, as I said, cost and the profit of the business for a given period of time. So remember this meaning. It's a financial statement. It records the revenue, the sales revenue, the costs and the profits of the business for a given period of time. Of course, income statements, like balance sheet, like any other document prepared, it's prepared to be used by different stakeholders. We will talk about them in details in chapter 25, but of course, managers will be using it, owners, workers will have interest in checking the accounts of the business. Simply using documents with numbers will help businesses to take decisions, and usually we prepare them on yearly basis. In the income statement, you'll see these details. I'll show you in a minute the income statement that you should know, the details that you should know. So don't worry about the formats that you see already in the book. In the income statement, you'll see three types of profit. The first one is the gross profit. It's the first profit that you will see, which is the difference between the sales revenue of the business and the cost of goods sold. It's the profit that the business makes without deducting any expenses. Then we'll see the other figure, which is profit or net profit. The new name is profit. It's the gross profit minus the expenses. So once we deduct the expenses, rent, salaries, marketing expenses, all these expenses, once they are deducted from the profit, we call the figure profit. So gross profit minus expenses will give me profit. Then out of this profit we pay taxes, and then we pay dividends to shareholders, and we will end up with the retained profit. Retained profit is the profit that the business keeps, and we already know this term from chapter 21, where we talked about retained profit as a source of finance. So here the retained profit is the profit that is blocked back or we keep in the business for reinvestment. Remember, sometimes we might not have retained profit because simply our expenses are high, or we are not selling well this year, or whatever reason might be there to make the retained profit zero sometimes. Okay, so in a minute I'll explain the sequence, how the income statement will look like, or let's say how should you see the income statement and how should you assess it. So if you look at this figure, this is the income statement that I want you to know. Of course, in real life, in accounting, the formats and the details of income statement are a lot, but for us in IGCSE, we have to know some points only. So we start with the sales revenue. Of course, sales revenue is the money that the business makes out of sales of its goods and services. Cost of goods sold will be the cost of the goods that we bought and we want to sell, or the cost of goods that we produced and we are selling. Then we have the gross profit, the first type of profit. Remember, gross profit is the profit that the business makes without deducting expenses. Simply, it's the price or the product that you sold minus the cost of the product without deducting any expenses. Expenses are deducted from gross profit. Then we end up with profit or net profit. Then the business will pay taxes. After tax, profit will be there. Then we'll pay dividends. Remember, dividends are the annual payments, which is the part of profit paid to shareholders. So you have to pay shareholders at the end, and then you end up with retained profit, which is the profit that is kept. So you have to understand and memorize the sequence. So sales revenue minus cost of goods sold, then gross profit minus expenses equal profit, minus taxes equal profit after tax, minus dividends equal retained profit. This is what I should understand and what should I memorize, because now you can see, if I look at the figures, it's clear that if I want to increase this figure, which is net profit, I have to control my expenses and I have to increase my sales or decrease the cost of goods sold. If I want to increase gross profit, I have to either increase my sales revenue or decrease the cost of goods sold. If I want to increase the retained profit, I have to work on many things: increasing my sales revenue, proper advertisements, building loyalty. Remember, increasing sales revenue, it's not only by selling price, by increasing selling prices, of course. So I have many things to see and to analyze in this income statement. So if you understand this, you're fine with income statements. Income statement will look like this. So for me, it's more than enough. Okay, so we can do this exercise together to illustrate another point. Let's say XYZ sells cans, Pepsi cans. It costs them $2 per can, so they buy it from suppliers for $2 per can. They sell it for $3 per can. This is the selling price, SP. Okay, in 2018, it started with 200 cans. This was the opening stock. It purchased during the year 300 cans, and the final stock or the closing stock was 100. Then I asked you this question: what are the cans sold in 2018? So what are the cans sold in 2018? So how you'll find the answer? It's simple and easy. I started with 200 cans, 200. I purchased 300. Now I have 500. I ended with 100. So minus 100, which could give me how much? 400. So 200, which is opening stock, plus purchases 300 equal 500, minus closing stock equal 100. So the cans sold during 2018 will be 400 cans. Now I ask you, okay, what is the sales revenue? How much did I make for selling 400 cans? Simply I apply the rule, which is quantity times selling price. So I sold 400 cans times, this is the selling price, 3 equal 4 times 3, 12, $1,200. Then I ask you, what was the cost of goods sold? I know that the goods sold were 400 cans. What is their cost, or how much did they cost me? Simply 400 cans, each were bought for $2, so $800 is my cost of goods sold. Now I can find the gross profit, which is sales revenue minus cost of goods sold, equal 1,200 minus 800, and this will give me simply $400 as gross profit, right? So then I find the expenses. Of course, they will be given. I deduct them, and then I follow the rule that we already saw. And of course, it's simple and easy to calculate. I just have to understand what each figure means and how it works. So you have to know how to get sales revenue, how to calculate expenses, how to calculate a profit. In the exam, it's simple. All paper 1 questions and paper 2 were not hard to understand. So you just need to know major points. In the book you have some points also, or some exercises. You can cover them and solve them. And I think that's all for income statements. This is all what I saw in past papers. See you in chapter 24 in balance sheet.